Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's continue to discuss the situation on the euro currency. A big pattern for shallow delay. Well, you can see that market is showing the price action that we have suggested in our weekly research, since we have discussed particularly this area of support. And we said that this level is not just the 127 extension of that butterfly, as well as the weekly pivot support one and some intraday target. So ABCD pattern 618 extension also stands in that area. But what is the more important, that this level is also the 50% support on the monthly time frame of the 7-year rally that has started in 2000 sharp and has lasted for 7 years. And that is the 50% support. That is particularly an area that has held the market from the collapse in 2005, the first test of this area. And later it has happened again when the first wave of the Greece crisis come on the market. So you can see that market now has shown the pullback that is quite reasonable, and we have discussed it that this will be nice if market will show this pullback, since this is a significant area of support. And if market will show the classical pullback, at least theoretical pullback to the upside, that will be very welcome. And we will use this potential area, try to enter on the short side of the market. As you can see, market now stands above the weekly pivot point, that is blue line, it's 122.47 area, and that is particularly our level to watch for. That is the weekly pivot resistance 1. It's 123.32. That is the 3-8 resistance of that swing, 123.65. Well, we know that very often when market stands in the long-term bear trend, and if it will turn to some retracement, usually it retraces to the weekly pivot resistance 1. Usually the weekly pivot resistance 1 and weekly pivot support 1 hold retracements in the corresponding trends. That level is also significant from the trend point of view. You can see this red line. That is the break-even of the trend by the MACD, break-even point. So if market will cross this line to the upside, trend will shift on the bullish side by the MACD indicator. And that will mean that market could show some deeper retracement in the current environment. And from the bearish perspective, this just adds more headache for the bears, since they will have to make the hard work to estimate the potential levels where market could turn to the downside again, and to decide will it turn to the downside at all or not, and some other questions. So from the perspective of the trend and from the perspective of the logical bounce after the hitting of the target of the butterfly, I prefer to see the reversal in that area. That will be perfect from the, as we could say, the theoretical point of view of the market behavior. Also take a look at this leg that I have told a million of times. You can see that this butterfly has a bit lack of the harmony. That right wing of the butterfly is much faster than left wing, this swing down. This tells that very probable the market will not stop at 127 extension. And in this environment, market very often continue move to the downside after the some respect of the 127 target, continue move to the 1618 extension. That is what I particularly wait for. Well, on the 4-hour time frame, what we could see on the chart, first of all, take a look at this pattern that we have discussed, that is the shallow stop grabber. And we said that the target of this pattern probably this swing high, the previous highs, or maybe even these highs, but this conservative target. You can see that market has accomplished it. So by the stop grabber pattern, market has taken out this swing high and hold intact the lows of the pattern. So market hasn't failed. Pattern hasn't failed and market has accomplished its target. Also take a look at this pattern. A, B, C bottom. Market accelerates to the 100% extension, 127 extension. In such kind of environment, it's very common for the market to continue move to the upside and hit 1618 extension. You can see also that that area is also in agreement with this ABCD pattern and 1618 extension. But one thing is worry me a bit with this price action. Take a look at these candles on the 4-hour time frame. Long shadow to the upside, some kind of the doji, spinning tops, if you could call it like that. That is indication that market is in some indecision. And take a look at this leg. This leg is a bit flatter than this one. This tells that the power to the upside turned to some housing. Market is tired to push prices to the upside. Usually after some kind of consolidation, some kind of the dojis that stand side by side very often follows some significant move, some trending candle. For instance, you can see it in any part of the chart. You can see some consolidation, thrusting move, consolidation with the dojis, some indecision, thrusting move again. So that is very common. The same is here, for instance. It's upside candle to the upside. Well, from that perspective, although market is showing this pullback to the upside and 1618 target hasn't reached yet, and this level, as we discussed, is very suitable for us to search for the possibility to enter on the short side of the market, we should take into consideration some signs of the housing of the market. From that perspective, probably it makes sense to enter with the small lot right from that level. Because if market will proceed high, you will add more with this completion point of that ABCD pattern. But if market will reestablish move to the downside, continue plunge to the downside, show some move to the downside, in this case you will risk stay without the position. Well, although we always tell that it's need to be hurry in the market and wait to accomplishment of our targets and our entry points, but you should understand me correctly that till our area is just 20 pips. It's very difficult to predict with such kind of precise where a market could stop the retracement. Well, that's why it's probably makes sense to enter with small lot right from this level and add significant position value from the completing point. Now, how you could do this? First of all, you could trade either patterns or trend itself. If you will trade patterns, let's take a look at the hourly time frame. Conceals some kind of the housing of the market. Okay, you need to see some pattern on the hourly time frame, on the bearish reversal pattern that you could trade, that could trigger your entry. For instance, I don't know, maybe some kind of the butterfly. This will not, but for instance, if we suggest that this is the left wing, if market will show some kind of the butterfly, you could enter with the reversal point of the butterfly to the downside. So anyway, you should see some pattern that could trigger your position on the downside. That is the first possibility. The second possibility is to trade the trend. When the market, for instance, will accomplish this pattern right at 1618 extension, for instance, or it's right here, and you will see thrusting move to the downside, so that hourly trend will turn to the bearish side with some confirmation by the price action, some thrusting move. Then you could use this most recent thrust to the downside as your working swing and catch the first retracement to the upside, 3-8 retracement, to enter on the short side of the market. That is how you could do this by the trend. So both of these ways have the difference of advantages and disadvantages. Well, with the trading of the pattern, you will get the stop loss order that will be linked to the pattern, and you will get the better entry point. But when you will trade in the pattern, you will try to anticipate the reversal. When you're dealing with the trend, you will get worse entry point, but you will not anticipate the price action. You just join the start and move to the downside. That is already has started. So that is choices up to you, how you will act. Well, but keep an eye on this level, because this is really signs of the housing of the market, and some probabilities exist that market will not proceed to the 1618 extension, although we would like to see it. Also, this pattern is not very nice, because this thrusting move is just, you could say, 2 candles to the upside, now thrust to the downside, and then leg to the upside. This is not very typical and nice looking ABCD pattern, but that is only that we get, so we should stick with it and take a look at this development. So that's been said, the overall bearish picture still holds on the market. Market has shown the bounce that we have expected. Market now stands not at the oversold and overbought. So and now what market is showing some kind of the housing. From that standpoint, our advice is now, we think that probably it makes sense to enter with a small lot from that level. And if market will suddenly proceed to higher to that level, enter more the major part of your position from that level. So even if we will become wrong and market will break this level to the upside, will turn daily trend to the bullish side, probably it will definitely respect this area by some retracement that will allow you to put your stops to the break-even. So this will be the agreement at Fib resistance and weekly period resistance 1. This is significant area of resistance. If we surplus here the overall bearish context, the market should show some pullback to the downside. So that is our current view on the market. Keep an eye on this level, since it's very significant and very interesting for the perspective to enter on the short side of the market.